All right, we are back. Sorry about that interruption, guys. It sucks when the internet just goes out unexpectedly. So we're sorry about that. It sucks, but we are back again. So Tom, I forgot where we left off. I thought it was with plug. I'm trying to remember. All right, so guys, let us know where we left off, and we could start looking at a couple different stocks. But looking at everything, Tom, I'm not sure if you saw this, but Enphase and like RUN are like really running, and it's not just these two stocks. It's just like some of these clean energy plays in general. Even like Plug.
Yeah, they're really running up. And I don't know what's making these stocks run up so drastically. I don't know if it's just bounces off supports or if there's some great news. I haven't seen any good news personally coming out. So if any of you guys find any great news about these plays, definitely let us know. But, I've been seeing a lot of good movement out of this whole sector. And I don't know if it just has to do with oil going up or what's going on. But either way, these clean energy stocks are on fire right now. Even Tesla, Mike, is kind of following these stocks up today, hitting $810 a share. I mean, they're also part of that clean energy sector as well. And it's just awesome to see all these stocks up. I know CHPT is right around that $20 resistance again, and they've been running up this morning very strongly. And hopefully they can get up above that resistance because that's been a pretty big support for them over the past few months. We recently just broke that, and I really hope to see a pretty big runner eventually out of this stock, out of Plug, and also out of RUN again, because man, these stocks just keep running up on the daily. And it's just like at some point, they're going to get a pretty big boost to the upside at some point once all these big buyers and stuff start running in, or maybe it'll take these earnings. Like if they have a great earnings, that could really push these stocks, I think, pretty far back up there. And, a lot of these stocks are still down here by supports comparative to their all-time highs. I mean, there's still a ton of room back to the upside.
There we go. So yeah, RU1 is my favorite out of all of them. I would say like I really like Enphase as well, but I feel like at these levels, RU1 is definitely my favorite. They do have earnings pretty soon, and they're in a growing industry. It's not like we're talking about a good setup on like Exxon Mobil that probably won't grow a ton over the next decade or so. But we all know solar and clean energy is just exploding now, and when you have an opportunity to dip by a solid company at a solid price, it's hard to resist it.
Yeah, it really is. And especially like these stocks, like you said, like RUN, I'm glad you pointed this one out as your favorite because, man, it's been holding support for a long time. It's been looking really good. And, all these stocks, like these are the stocks for the future. And I know like a lot of people, they don't like to, kind of bet on futuristic type of speculation. But whenever you're looking at it for the long term, it's clean energy stuff and it should end up doing pretty well. And I really like the way that it's kind of bouncing off support and stuff. So hopefully it goes back up. I know RUN is your favorite. My favorite is probably CHPT or BLNK, but either way, I mean, they all move in sympathy with each other generally. So if one of them flies up 20%, the chances of the other ones going up are also pretty strong.
There we go. So like out of like all the setups right now, like what do you think the ideal move is? Like I know shares would definitely be the safest, but a lot of these implied volatilities aren't cheap. So when you're buying call options, they can definitely get a little bit expensive. So like what are some of your like ideal strategies given these setups?
Yeah, looking at RUN, I feel like with RUN, the way that they're kind of down here right by support, I feel like with them, the way that they're bouncing and stuff, they could be a pretty good option, I think, for leaps possibly. Now, I know the IV is starting to come up, but comparatively over the past couple of years, at least it's in more of like in the middle of the range. It's definitely not at the higher end towards that 100% spectrum. So I do like RUN a little bit better for leaps. But if I'm looking at a stock like CHPT, I think with them, I would almost go with more of just for shares. I know the implied volatility is also, again, more of in the middle, but I think that with them, they're just not bouncing off support quite as well. So I feel like that there could be lots more of up and down movement with maybe CHPT or BLNK. So that's why I would go for shares with them. But with RUN, I would try to do a mixture of shares and probably leaps personally. I know that shares would be my personal way to go because then I could just sell calls on the way up. Like I could get 100 shares today, pay $4,700 for it, and then I could go sell the $50 call that expires at the end of this week. And let's go see what that'll expire for. I'll just say, yeah, October 15th. I could just sell the $50 call that expires at the end of this week for $55 in premium. So that's pretty good. It's $3 away. And even if you lose there, you sell your shares at $50. So it's a win-win scenario. And that's why I would go with shares, is just so I can start running that wheel strategy. And guys, that wheel strategy is awesome, where you can just buy shares and start selling covered calls off the shares. Or if you don't even want to get shares to open the position, then just sell some puts to open the position. That's also another awesome way to go.
You know it. So good stuff. And then we have Adam saying, what do you guys think about GME? LOL. So, it is one of those like hype plays, but, if I'm being honest, the hype from Wall Street Bets, especially with GME, has slowed down so much. Like, GME was the short squeeze play in the beginning of the year, right? They went from like $10 up to $483 or even higher at one point, I think. But, the market is totally different than what it was in the beginning of the year. And especially Wall Street Bets is different. Literally every single day there's a new short squeeze hype play from Wall Street Bets. And the problem with that is all of the current plays, the buying power just gets like spread out. Instead of, let's say, having $50 million going to GameStop, there might only be like $2 million in GameStop, and then $2 million into Clove, and then $2 million into, whatever play is next. It just dilutes the power. So I'm really not a fan of it, to be honest with you. It has potential for like the short squeeze hype, but it just seems like Wall Street Bets has really changed.
Yeah, and look at this. I even brought up like the sentiment charts from financials.fyi. And like you said, Mike, there's so many other stocks up here. Like obviously SPY is usually leading the way, but look at this. They're on Clover, Smile Direct Club, GameStop, SOFI, Tesla, AMC, BABA, OCGN. And it's not like that AMC and GameStop are at the top anymore. Like look, we have Clove leading the way. We have Smile Direct Club. We have Sophie higher than Tesla even. I mean, this is kind of crazy, actually. There's just so many stocks here. We even have LFG. I've never even heard of ASTS, but, there's just, like Mike said, there's just so many coming into Wall Street Bets that it's really hard for them to just focus down on just one. And I really would hope GameStop could get back up. But unfortunately, without the support of Wall Street Bets, I just don't see GameStop, flying back up in the future. Now, I know that they're a decent company and they sell games online and stuff like that. And I think they could end up being decent for the long term, but I just don't think that they're worth 180 a share.
Yeah, for sure. For sure. All right, so we have Max saying, huge thanks for covering Run in yesterday's video. Up 40% on my calls so far this morning. So love to hear that, and great job trading. Yeah, Run's looking pretty awesome right now. Honestly, yes, there is awesome opportunity for short-term trades, but I think there's even more opportunity for a buy and hold with this one.
Yeah, me too. And it's bouncing off that key support. Looks like we're finally getting that big move back to the upside. And obviously we could always come back down and retest support again, but we have earnings coming up on what is that, November 4th. So looks like just under a month away for these earnings. And I will say, if those earnings go really well for RUN, I mean, it could make for a pretty big move to the upside. And we can see that in the past on earnings, sometimes the earnings have made the stock kind of gap down, sometimes it's made the stock gap up. So you have to see how it goes, but hopefully it ends up being one of those awesome scenarios where RUN comes out with some awesome news. Maybe Congress gave them some funding or something like that, and they can get a nice pop back.
There we go. So let's check out AFRM really quickly. I know this stock has been on a pretty awesome uptrend. What are your thoughts with this one?
Man, I actually really loved AFRM to the upside, and I was really hoping that we could see a breakout up above that 145 to 147 resistance. Unfortunately, that did not happen. Statistics always say that generally the stock would double top up there. So as of right now, we're seeing the stock double top, and I'm not surprised to see it personally, but I really wanted to see a solid breakout with this one. But either way, it looks like it's coming back down a little bit right now. I personally feel like it had such a big run over the past couple months that with the way it's double topping, I feel like it could definitely consolidate maybe for a couple of weeks before going back up again. But they did have those good deals, so I won't put the stock rising against it. But either way, I feel like that with it double topping, I think it could end up going down. What are your thoughts?
I have two potential scenarios for this one. One of them is it just goes on a breakaway run up to the upside, kind of like we saw with UPST. And I wouldn't doubt it. AFRM has been on a crazy uptrend, and they've been uptrending for a pretty good reason. They're making some huge deals, which is awesome. And then the second scenario would be that it just like consolidates for the next couple months or so. Honestly, I'm not expecting a huge like crash with this one. It's just I don't see it. When you have deals this big, I feel like there's so many buyers coming into this one in general, and it isn't like a growing industry. So I'm either expecting like an explosion to the upside or just like boring consolidation. But you have to be careful if you're an options trader because the implied volatility is over 100%. So the problem is that even if you buy calls and the stock goes to the upside, you can still lose money.
Yeah, you really could. And with it being this high, and especially this high comparatively to what it was a few months ago, I mean, that's going to be crazy. Like if you bought maybe some calls that let's just say expire in November or December right now, let's say AFRM falls down to 120 and just consolidates here for a month or two, that's going to destroy the value of those options. So, it's really better to get, maybe something for the longer term. Obviously, more time is better. Obviously, leaps are hand over fist better than most things out there, especially than just naked calls. But shares could be a good way to go too. It's just hard to buy them so high right now in this. But I'm with you, Mike. They've had such good deals lately, and it's not like they just had, like some like small headliner deals. Like they've had big deals like with Walmart, Target, Amazon. I mean, man, like what bigger companies can you make deals with? Like those are powerhouses right there.
Yep. All right, so that's where we left off, Tom. JW was asking about INMD. That's where we left off. So I've never heard of this company. They're up a ton today. What do you think about them?
Yeah, look at this over the past year. I mean, what a great move out of this company. They even just had a 2-for-1 split on October 1st. So I don't know. This one's going to be really hard for me to say. I don't know anything about them, but their movement is actually really awesome. So I will say the movement's great. And if you like them for the long term, it seems like a pretty decent play, at least with the way it's been running for the past couple of years. So personally, I like the movement here. It's just with the way it's split like 10 days ago, it's just really hard to tell because it's just been really up and down since that split. So I think I would just wait on it personally, but I will say the movement's pretty good. If you've been keeping track with them, you know what they do as a company.
Here we go. Awesome. So looking at everything, Tom, Redfin's having a pretty good day, mainly clean energy. I do like Redfin for another dip buy as well. But looking at a lot of these setups, I noticed that earnings are coming up pretty soon on a lot of these plays. So hopefully we get some nice movement in the short future. Looking across the board, most stocks are green today that are at least on my watch list. The China stocks are holding their ground, which I think is pretty awesome. They've been selling off big time over the past couple months, and over the past week or so, they have just been exploding. And it's not like they're tanking off today; like they're definitely holding their ground. And it looks like Baba has earnings soon, right?
Yeah, it actually does. Let's get on the daily chart and look at it. Their earnings are actually on November 4th. And I remember earlier we talked about some other earnings being around November 4th as well. I think it was like CHPT or RUN maybe. But looking at it, I mean, these stocks I just have some awesome potential, I think. And if these earnings can go well, Mike, in a month, I feel like that could be exactly what these China stocks need to maybe get this nice move back up. And I know they had a nice move last week, but, Baba's still below that, like, $180 to $200 level. And I feel like lots of people are going to be waiting for these stocks to maybe get back up into those key levels. And, there is earnings coming up. The earnings season is starting to ramp up here. I know I have the earnings chart here in a little while, but I know banks have a lot of earnings coming up this week as well. But man, these China stocks, I mean, like you said, I'm really glad that they're holding their ground, and those earnings are going to be really key with them. And I wonder what they're going to kind of talk about, because obviously, they're going to talk about the government of China quite a bit in those earnings. And I'm sure that you're going to hear a lot about maybe a lot of excuses, maybe that their stock has went down because of a lot of Chinese regulations and stuff. So hopefully we get some good earnings or maybe some good a good outlook or something from them, because man, it's been bad lately.
Gotcha. Alrighty, so looking back at some of the scanners, Apple's actually selling off a pretty good amount today, and I think that's interesting given we're seeing a lot of, I guess you would say, upwards movement across the, I don't want to say the market overall, because it's not the market overall, but it's like, some of these plays have been beaten down like RUN. But either way, Apple is just kind of not doing anything while we're seeing, some of the growth plays really pop off, which is exactly what I like to see.
Yeah, and Apple actually just fell below that 1,000 SMA, which is awesome to see. And they're actually about to break that 142 support. And if they break that, I could see a pretty steep sell off with Apple here. They have the next support I would see is around 140. So that would be a pretty nice 2 point move. And I could see it happening as well. But Mike, I just wanted to bring up these earnings really, really fast. I just went through and got the earnings whispers chart up here for us. But, later in the week, we actually have quite a bit of stuff reporting, and this could actually end up affecting the market pretty largely, Mike. We have JP Morgan reporting on Wednesday, as well as Delta Airlines, and the banks and the airlines are two pretty big sectors right now. On Thursday, we have Bank of America, Wells Fargo, Citi, Walgreens, United Health, Morgan Stanley, even US Bank. So there's definitely a lot of banks reporting. We got Goldman on Fridays, as well as Charles Schwab and PNC. So this could definitely be a pretty crazy earnings week, Mike. And I know that this is the very beginning of the earnings season, but man, these banks have been running a lot lately. And if these earnings go pretty south, I mean, man, I feel like that could make the market drop pretty drastically.
Yeah, we'll see what happens. Bank stocks, they have been running a lot, and I know that rates have been increasing as well, which is pretty good for bank stocks in general. And, they've been popping off. But I feel like there's a lot of just I feel like there's a lot of big things happening in the market right now that a lot of people don't even realize. Of course, we have everything going on with Evergrande, and then we have the debt ceiling news and earnings coming up as well. So there's just a lot going on. Of course, there's always the political drama, but it is what it is. And I think out of all of it, the biggest opportunity will be in some of these growth plays that are beaten down. I say this every day, but I don't think the opportunities with, the market overall right now. We can see people like RUN that have been struggling so much over the past couple months. And I think this is just the beginning, and in the worst case scenario, if you like the stock for the long term, it doesn't hurt to buy some shares now. No one can catch the bottom. So even if it falls down, you could always average down if you wanted to hold it for the long term.
Yeah, it's such a great time to buy shares, like Mike said. And, there's stocks like RUN, BLNK, Enphase, Plug, CHBT. All five of those are awesome stocks, and they're all moving up, and they generally move up at the same times, which is also great. So hopefully they can all kind of get back up there. I love the bounce on support. I know we talk about these stocks all the time, especially lately since they've had such great opportunities coming out. But, eventually, Mike, then the thing is in the next 6 months, if RUN goes up to $80 or $90 a share and Apple goes down to, 120 or 115 a share, we might change our minds. We'll probably flip flop, and then we'll be saying to buy Apple and sell RUN and CHPT. So it's not like that we're just sitting here, going against the overall market or anything like that either. It's just, the market goes up and the market goes down, and there's always those transitions out of the value stocks into growth stocks and then back into value. And right now we're just seeing that big transition into these growth slash clean energy stocks like RUN, CHPT, BLNK. But, we're not trying to be too dim on the overall market. We're not sitting here saying that the SPY is going to crash and burn or anything like that. It's just the main thing is that transition is starting to happen. And some of these smaller stocks are in such good opportunities that, like Mike said, if you don't grab some shares here, you're going to be kicking yourself in a few months.
For sure. So yeah, rotations happen all the time. Like Tom said, every couple months or so, we see I guess you could say the market itself buy up growth stocks, and then shift into value, and then shift into whatever. There's always those rotations. It always ebbs and flows, and it is what it is. And right now, it looks like the ideal sector to jump into are some of these beaten down growth stocks. But looking at everything, Tom, it looks like we have UPST still going, and honestly, I haven't been following this one too much, but looking at UPST, this is the prime reason why I don't short plays like this, because it goes from, let's say, $100 up to $346 in a month or two, and then you're probably thinking all right, this might be the top plays like this, because it just keeps going up and up and up.
Yeah, definitely. I mean, man, you can see it just went up and up. And I know that we talked about this stock a lot on the way up, Mike. And, the one day that really got me, and now keep in mind, I did not take a position here, but I was really, really tempted on, let's say, September 10th, right on this big red candle right at that $300 resistance. I was really thinking that this stock would get a nice move back down. And I'm really glad that I listened to you, Mike. I did not short it right there. And man, it ended up flying right back to the upside. Looks like the same thing might be happening right now. We're definitely going to be coming up and retesting these higher levels sometime soon. And man, it just keeps going and going. And it's really hard to bet against these ones. And, kind of like we talked about earlier, Mike, AFRM is almost starting to set up like UPST was in the beginning. So if AFRM can get some big moves up above their upper resistance, kind of like AFRM did, or I mean, kind of like UPST did whenever they broke $200 and then ran up to 350. I think that could be an awesome play for AFRM if they could break that upper level of 146.
There we go. So, Tom, do you have any last minute stocks, options, or anything you're watching for the rest of the day?
Yeah, I mean, a lot of people are keeping their eyes on these stocks like CHPT, RUN, and stuff like that today. But, there is some other ones doing decently well, at least today. Like DraftKings is actually having a pretty good green day, up around 1%. Now, it's not the best day for them in the world, but it looks like they are kind of maybe making a little bit of a double bottom down here, and they are consolidating well, which is good. So I wanted to point out DraftKings. I also wanted to point out LCID, which is Lucid Motors. They've been pulling back a little bit lately. They kind of double topped up here right around $30. Almost reminds me of like a Palantir, how they got rejected at $30 twice like that. But I really hope that LCID can kind of get a move back up with these clean energy plays like RUN, BLNK, especially if we see Tesla start to pop off too. I'd really like to see Lucid maybe follow along for the ride here because, a lot of people have talked about Lucid a lot lately, and I feel like that they're getting a little bit overlooked right now.
All right, so thank you guys so much for watching today's stream. I know the audio was brutal, literally lots of problems today, but thank you guys so much for watching. We had a great time, and the market is kind of going crazy, but only in certain areas. Like obviously, the overall market isn't really doing anything, but like we said, however many times today, some plays are popping off, like RUN, BLNK. Tesla's looking pretty good. DraftKings is looking all right. So, there are opportunities out there, but you just got to kind of shift away from the overall market and, I guess target some of the plays that are, where the money's flowing. So, thank you guys so much for watching today's stream and have an amazing rest of your day.